Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello, good morning and welcome to Power Breakfast on CNBC TV18 in the Mumbai News Center. I'm Mangla Malu and with me is Ekta Batra. Ekta, truth be told, I'm still a little heady from the kind of moves that we saw yesterday on all the public sector banks. Come evening, we saw the FII buy figure, 3,500 crores. The first time they bought in the last 25 sessions. And the first,
at least in terms of the sell figure that came in yesterday's trading session. But all that and more in the next 1 hour. These are top stories. US markets end firmly lower, pressured after a soft batch of third quarter numbers. Asia opens mixed. All eyes on the ECB or European Central Bank meet today. Draghi is expected to announce a reduction in the size of its monthly bond buying at its biggest policy meeting this year.
NHI chairman and my secretary is always giving me this 6,500. But I am not satisfied on that.
Transport Minister Nitin Gadkari raises the bar, says he expects 10,000-kilometer road construction orders from NHAI this fiscal, promises to close the year with road development of at least 30 kilometers per day, seeks to raise capital through an NHAI-led bond issue to encourage retail participation in infra development.
FMCG major HUL posts an operational beat despite higher advertising spends. Revenue and volume growth meet expectations.
In big earnings today for Yes Bank, all eyes will be on asset quality. Provisions can remain elevated. Watch out for divergence details. Biocon profit too seen lower by 25%. Revenue growth expected to be in single digits. As far as Jubilant Food is concerned, reports numbers today. Domino's same-store sales growth seen between 5 to 6%.
And the government softens its position on Aadhaar, tells the Apex Court it can consider extension of the deadline for enrollment with Aadhaar to the 31st of March. Even the Telecom Ministry relents, may not make it mandatory to link mobile phone numbers with the Aadhaar for KYC for those not enrolled with Aadhaar.
Well, first up, let's take a look at the Asian markets. They are slightly tepid given the sort of declines that we saw on Wall Street yesterday. Remember, the Dow fell by about 112 points, the biggest single-day fall in the last 7 weeks. Boeing earnings disappointed, as did Chipotle. So we're seeing some sort of weakness as far as the Asian markets are concerned. The Japanese index is mildly in the green as we speak. The traders are also on edge ahead of reports coming in from technology giants as well as banks and a European Central Bank meeting. So we'll keep an eye out on comments coming in from Draghi in later in today's day, as well as the Korean markets. They're down by almost 0.2%. The SGX Nifty, that one should come up for you, indicates a start with a cut of nearly 45 points. As far as our markets are concerned, 36 points now as we speak. So we'll watch out for what happens given the sort of weakness that there is in the global markets. But our markets right now are happy with the domestic factors, Ekta.
Yes, absolutely. Well, let's tell you about what took place on Wall Street overnight. US stocks had their worst day that we've seen in 2 months. Its corporate earnings really disappointed. Investor concerns of rising bond yields also dampened sentiment in stocks. The Dow Jones fell over 100 points, marking what was its biggest one-day fall since the 5th of September. S&P 500 declined almost 0.5%, with industrials and telecommunications leading in terms of decliners. Nasdaq Composite slipped 0.5% in trade as well overnight. CNBC's Hampton Pearson gets us a wrap of all what took place on Wall Street.
A sell-off for stocks today. The Dow falling 112 points, the S&P off by 11, the Nasdaq down by 34 points. Elsewhere, new home sales in the U.S. jumping in September to the highest level in nearly a decade. Purchases of these homes increased nearly 19% to 667,000 last month. That also marks the highest month-over-month percentage increase since January of 1992. Economists are expecting sales to fall. Chipotle Mexican Grill leading the declines today. The Tex-Mex burrito chain posting its worst day in more than 5 years, down nearly 15%, after the addition of queso to its menu and higher prices failed to help bolster third-quarter earnings. The company reported after the bell on Tuesday, and shares have been losing ground ever since. And big changes may be coming into how Americans get their news. FCC Chairman Ajit Pai telling Congress today the Commission will vote in November to change rules that stop one company from owning too many newspapers and TV stations in one market. That rule has been there since 1975 and is meant to ensure a diversity of news opinions. That's the action from the U.S. market. You have a good trading day in India. Back to you in Mumbai.
Okay, well, disagreements over the controversial pieces of the Republican tax proposal threaten to trip up the party's efforts to approve a tax overhaul this year. Commerce Secretary in the U.S., Wilbur Ross, said the administration's proposal to repeal deductions for state and local taxes may be refurbished by introducing income thresholds.
The president does not want to interfere with people's retirement savings, period. He also wants tax cuts, especially middle-class tax cuts and tax cuts for businesses. Those are his big objectives, and that's what's important to achieve. The real way to pay for the tax cuts is by stimulating the economy and generating more tax revenue. If we can get the economy up 1% a year more than where it otherwise would have been, that generates $2.5 trillion over 10 years. So the real debate is over the technicalities. How much growth will you really get from the tax cut?
All right, let's get you some global opinion from Ben Mendel of JP Morgan on what he expects from the global central banks going ahead.
This has been a somewhat synchronized tightening in monetary policy. So, I mean, there's the Fed to begin with, where we've had this conjecture that they'd resume hikes in December. Looks like that's mostly priced at the moment and will likely continue into next year. Other central banks are going to follow the protocol laid out by the FOMC and the Fed more generally. So I think that as the Fed communicated an exit from unconventional policy, it was a very hedged manner of communications. On the one hand, you tighten by pivoting balance sheet policy. On the other, you think about affecting your forward guidance to move in the other direction. The idea is exactly to tighten financial conditions, but not to over-tighten them and not to do it in a sudden manner. And so I think that would be a reasonable expectation thinking about the ECB.
All right, and across the Atlantic, European stocks, they closed lower as investors reacted to new earnings reports as well as monitored some fresh economic data. So all three frontline indices saw cuts of nearly 0.4% to about 1%. That was the British index, which was the key underperformer there. Investors are also, remember, cautious ahead of the policy decision from the European Central Bank due later today. On the data front, the reason why, despite reporting a robust economy, despite Brexit, FTSE was the underperformer. The country reported its highest rate of inflation in over 5 years, paving way for the Bank of England to hike interest rates for the first time in a decade next week. Perhaps that's the reason why we saw the FTSE being the key underperformer there.
Okay, well, moving to Europe then, or rather staying with the European markets, all eyes will be on the European Central Bank meet today. President Mario Draghi has fueled tapering expectations. CNBC's Sri Jagaraja gets us more details.
The consensus view in the markets is for a dovish taper by the European Central Bank. So that effectively means halving the monthly pace of asset purchases from 60 billion euros to about 25 to 30 billion, though a figure of 20 billion has also been bandied about. So the important point here, Bernie, is that the ECB will still be in the market buying bonds, continuing QE, but at a far slower pace. And also important to recognise that that process of dialing down the pace of asset purchases will probably be extended over a 9-month period between January and September in 2018. So in effect, that should soften the blow for the markets. And that's very important because Mario Draghi is very conscious of the FX levels and where the euro stands. He doesn't want a euro to overshoot over 120 and possibly getting to 125. He's very, very cognizant of that. So very gradualist, cautious approach by Mario Draghi and the ECB to normalisation.
All right, and staying with Europe in the periphery, Catalonia's independence crisis in Spain, that one deepened. The Catalan vice president said the region has no choice, and I quote that, but to declare independence and will, again, I quote, work toward building a republic. Spain's Senate prepares to impose direct rule on the region tomorrow, but may introduce it gradually to avoid causing too many fresh protests. Meanwhile, the Catalan president has also turned down an invitation to address the Senate about the region's independence.
All right, well, let's tell you what's happening in other asset classes. In the currency space, the US dollar has pared losses after surprisingly strong data in the US, which showed durable goods orders have in fact risen and new home sales unexpectedly jumped to what was a 10-year high in the month of September.
In the world of commodities, oil prices slipped from 4-week highs after a surprising increase in crude inventories. However, the market was underpinned by statements from Saudi Arabia, which said it was determined to end a 3-year supply glut.
From precious metals, we have gold prices which are steady after falling to 2.5-week lows on talks of Fed succession. Reports indicated Republican senators favor John Taylor to become the next head of the US Fed Reserve, which drove US bond yields to multi-month highs.
With that, it's time for a short break, but come back and we'll focus on our markets. All the cues and news you need to know for trade this morning. Stay with Power Breakfast. Today on Dalal Street, we got 2 thumbs up to the massive recapitalization announcement by the government as far as the PSU banks are concerned. Both the Nifty and the Sensex hit new closing highs. The Nifty hitting almost the 10,300 mark. In fact, it crossed that intraday, fell just below that. That was the closing. The Sensex, that one rallied over 400 points. And tell you what, the Sensex hit the 33,000 mark for the first time. Just a few months ago, it hit the 30,000 mark, the 31,000 mark. And a stellar run it's had for the Grand Old Index. Those are some pictures from the celebrations out there. But what's in order today? Well, Ekta joins us to get us all the cues we need to watch out for trade today.
Well, like you mentioned, Mangalam, you know, it was definitely a historical day for PSU banks, and that left the Nifty at record highs as well. Not to mention that all the Bank Nifty constituents in terms of the likes of State Bank of India, etc., were up in double digits, something really historical. I mean, when was the last time you saw PNB rally over 40-odd%? But what stood out in yesterday's trading session was already what we spoke about in terms of the FII net buy figure. There was no extraordinary which came in. It was over 3,583 crores which they bought in the cash market, and DIIs took this opportunity to sell out a little bit.
Ekta joins us to get us all the cues we need to watch out for trade today.
Well, like you mentioned, Mangalam, you know, it was definitely a historical day for PSU banks, and that left the Nifty at record highs as well. Not to mention that all the Bank Nifty constituents in terms of the likes of State Bank of India, etc., were up in double digits, something really historical. I mean, when was the last time you saw PNB rally over 40-odd%? But what stood out in yesterday's trading session was already what we spoke about in terms of the FII net buy figure. There was no extraordinary which came in. It was over 3,583 crores which they bought in the cash market, and DIIs took this opportunity to sell out a little bit and sold around 156 odd crores. Now, if you look at the delivery stats, we have State Bank of India, 4,331 crores in terms of delivery. Bank of Baroda, 1,355 crores. PNB, 1,036 crores. Canara Bank, 463 odd crores. And the other corporate lenders, such as, say, even ICICI Bank and Axis Bank also saw some amount of interest. So, you know, it's obviously treated almost like a quasi-PSU. But nonetheless, ICICI Bank saw a net buy of around delivery buying of around 2,500 1,415, and Axis Bank was over 1,000 odd crores as well. So maybe there is much more confidence which is coming into corporate lending, and the fact that maybe corporate lending will probably pick up, and hence that would be indicative of the economy itself picking up. Remember, corporate lending is the one which has been lagging. So however, the SGX is currently indicating that maybe it could be a little bit of a consolidatory start. That could be in line with what's happening with Asia, plus the fact that we are at record highs. So maybe we could start a little bit on the back foot, and that wouldn't really be out of the realm of speculation. The other big cue which we need to work with today is obviously its October expiry. So obviously watch for the 3 p.m. move, any sort of intraday volatility, but it's been one of the best expiries that we've seen. We've gained around 5% at current reckoning already. So I would watch out for what happens with PSU banks, whether people start taking profits after yesterday's strong rally, or whether there is follow-on buying. Earnings reaction, we have HUL, which was post-markets. Volume growth good, EBITDA margin strong at 20%. Other earnings that will react, RBL Bank, PNB Housing. So I expect the momentum in the financials to probably be a little positive, despite, you know, the switch that we saw from NBFCs to PSU banks yesterday. Other Q2 numbers today, Yes Bank, all eyes, stock down 5% yesterday. We have Biocon, Crompton, Cummins, Jubilant Food, Mastech, United Spirits, Vijaya Bank, which would be coming out with numbers. So all of them to react to it, to numbers. Interesting day for the broader markets. Globally, Dow has had the worst day since September 5th, and Asia is mixed as well. So maybe that's another reason why we could see it start on the back foot. But let's see what happens on an intraday basis.
Right, Ekta, and stocks?
Yes, we have a lot of stocks in focus. So I'll start with Hindustan Unilever, where the volume growth was 4%. That's in line with expectations, and the margins at 20%, which were very strong. RBL Bank, net profit up 67%. PNB Housing, which I mentioned, profit up 51%. Mindtree, largely in line set of numbers. I think the profit was a bit better. So 124 versus our expectations of around 100 odd crores. Exide, profit up 25%. M&M Finance, profit up 17.7%. Tata Communication, big loss there, 250 odd crores. Other numbers include Everest, Aztec Life Sciences, Engineers India, Syngene, Questcorp, HCL Infosystems. All of them will react to numbers. JP Associates will be in focus, as the Supreme Court post-market said that they've declined to allow JP to hive off the Yamuna Expressway. They've extended the date for them to probably make that payment up to the 5th of November. HDFC Bank, which is in focus, as the RBI instructed the company to classify a project loan account as an NPA. So that's interesting. And HDFC Standard Life is going to hit the markets on the 7th of November. That's interesting because, again, HDFC would be in focus on account of that.
All right, we'll keep an eye out on that. Thanks a lot for that, Ekta. With that, we'll slip into a short break, come back, and we'll focus on the exclusive interview we had with the Transport Minister. He aims high and sets his ministry a stiff near-term target. More on that when we return. Exclusive now. Shireen Bhan caught up with Transport Minister Nitin Gadkari, and the minister said that he wants the pace of road construction to pick up, was also confident that all projects under the Bharat Mala umbrella will be underway by 2018 end. Gadkari also mentioned that they plan to raise capital from both the market as well as the common man in the near future by issuing attractive bonds in a month. Here's a slice of that conversation.
NHI chairman and my secretary is always giving me this 6,500. But I am not satisfied on that.
You are not satisfied?
No, I am giving, no, you have to do 10,000. And now the way in which the power delegated to NHI, I feel that our chairman and his team is in the position that they can go up to 10,000 kilometers.
You know, we often get lost in big numbers, so 7 lakh crores, 25,000 kilometers, 84,000 kilometers, and so on and so forth. So let me, for the sake of simplicity, break this down in terms of what it is going to come down to eventually when we talk about execution on the ground on a daily basis. Currently, we're doing what? Between 24 to 30 kilometers a day. If we want to achieve the 84,000 kilometer target that you've set out as part of this scheme that the cabinet has approved, it means doing 40 plus kilometers every day. You believe that that is doable, that's achievable?
First of all, I am not talking about 84,000 kilometers. Never I commit about this target.
Right.
But I will assure you one thing. At the end of March for this year, we will be as long as we will complete the target of 30 kilometers per day, more than that.
Okay.
I'm trying for that.
Okay.
Last year, it was 23 kilometers per day. And the next year, 100% I am confident we will be more than 40 kilometers per day.
To achieve that target, what about the funding? When we talk about this almost 7 lakh crore rupees now, you know, it's about 1.41 lakh crore rupees. That's the budgetary support that totally you get.
I'm giving you the, I don't have exactly the report, but when we prepare the project of Bharatmala, from 8 months we are working on that. And here there is a financial model is there. One is from budgetary, whatever the provisions we have. Second is from CRF funds. Third is from monetization. Now first we have already tendered the first project of TOT of 6,000 crores is in tender. So we have the project where we get more than 1,25,000 crores. There are a lot of projects are with us now.
That's what you hope to monetize on the TOT side. Yeah.
The third thing is we have already government has given permission to raise the 70,000 crore from the market. Out of we just 15 to 16,000 crore we raised, 3,000 crore in London Stock Exchange, 8,000 crore LIC. And now I am confident that there is no problem, we can raise it from Indian market. NHI's rating is AAA. At the same time, we have a lot of offers from pension fund, insurance fund, foreign investors. But now my feeling is, in such an economic situation, for the construction of road construction in the country, we should encourage the investment from the common man, the service people, the journalists, the teachers, the laborers, and government servants. The small people, they are investing their money in some chit fund and other things. Now the bank rate is reduced. So my idea is we can give them 1 to 1.5% more interest than banks. And we can go for bonds. And now we have appointed a consultant.
So NHAI bonds?
Yes, but NHAI is the authority.
Yes.
So that's why we appointed a financial consultant by which we can make a special vehicle which is guaranteed by NHAI. We will go for capital market. We raise the fund from the common people and after their retirement, 10 years, 15 years, we will give them interest.
Okay, well, moving on from roads now onto the big Aadhaar headline. The government has softened its stance on Aadhaar. Attorney General K.K. Venugopal has told the Supreme Court that the government can extend the deadline to link Aadhaar to various services and utilities till the end of the financial year. We also learned from sources that the government is working on some alternative to Aadhaar as well. Ashmit Kumar gets us the details.
So with respect to the Aadhaar juggernaut, has the government perhaps for the first time relaxed its position, softened its stance? That's the question that we're raising today, and it's not without reason. There are two reasons why we're raising that question. Has the government softened its stance? The first one is the concession by the government by way of the Attorney General before the Apex Court, where the Attorney General said that the government could look at extending the Aadhaar enrollment deadline to March 31st, 2018. Should that happen, this would be the second time that the deadline has been advanced. Currently, the deadline is 31st of December 2017. The second reason why we raise the question is that sources within the DoT tell us is that despite a March circular that makes linkage of Aadhaar with the telecom company mandatory, despite that, the DoT is now looking at alternative forms of identification, considering other forms of ID such as a driver's license, passport that can be used for KYC with telecom companies. Let's first address the first case here, which is the petition before the Apex Court. The Supreme Court is hearing an application that has challenged the linkage of Aadhaar with banks as well as with telcos. Now, the question that was raised is that the linkage of Aadhaar is nearly coercive in nature, is that there's a move to make Aadhaar mandatory for bank accounts. The petitioners also went on to argue that there's a move to make Aadhaar mandatory even for CBSE exams affecting students. It also raises a question that move to make Aadhaar mandatory is almost coercive in nature. Now, these were the arguments raised before the Apex Court. The government, importantly, has defended its stance by making two key concessions. The first one is that the government has said that as far as the deadline for compliance is concerned, deadline for enrollment is concerned, the government is willing to consider extension of that deadline to March 31st. Again, if it happens, will be the second one. The Attorney General also clarifying that the Supreme Court order making Aadhaar voluntary was passed before the Aadhaar Act and hence is no longer applicable. So one key concession coming in from the AG saying that as far as the deadline is concerned, can be extended. Now we move on to part two. The DoT sources tell us, the government sources within the DoT tell us, that as far as the compliance with the telcos KYC is concerned, well, they understand, they realize that not all persons might have Aadhaar, again, relaxing of position. The source is also going on to add that the telcos, the government open to examining alternative forms of eKYC. The government is actively looking at alternatives. Alternatives to Aadhaar need to satisfy the Supreme Court's authenticity and security tests. That's another key benchmark. That's another key takeaway as far as sources within the DOT are concerned. Also going on to finally say that as far as KYC by telcos is concerned, the government can look to consider IDs such as a driver's license, such as a ration card, such as even a passport as far as NRIs are concerned. So clearly, the government saying that they can also consider passports for NRIs. So that's the position by the DOT as of now, that why not look at alternative forms of identification. Here it's important to point out a caveat. Those who are yet to enroll, the government will soon announce alternatives. That's for people who are yet to enroll as far as Aadhaar is concerned. There's a distinction to be made. As far as those people who have already enrolled, for that the government has said, the DOT sources have said that they will examine if Aadhaar can be made compulsory. So that distinction is to be made, but nonetheless, a step back by the government perhaps reconsidering the options that it has on the plate available. The next key date to watch for will now be October 30th. That's when the Apex Court will resume hearing in this case, will entertain the application that has challenged the linkage of Aadhaar, and that's when we'll get more cues going forward as far as the Aadhaar juggernaut is concerned.
Welcome back. Well, FMCG major HUL reported what was a good set of earnings. There was volume growth of 4%, but what really surprised the street was the EBITDA margins, which came in at 20%, beating estimates and I think surprising the street as well, Mangalam.
Absolutely, you know, Ekta, the volume growth of 4% in line with expectations, that's something that the parent Unilever had said as well. It was the operational performance that really positively surprised the street. So if you take a look at the volume growth, 4%, absolutely in line with our expectations. The revenue growth of 6% too, in line with our expectations. Now the EBITDA, that one should come up for you. A growth of 20% versus our expectations of a 17% growth, and the net profit because of which came in at 1,276 crores, and this compares with our estimates of 1,210 crores. There was a bit of an exceptional of 35 crores, but even if you do adjust for that, it is a positive. And what I liked is that the operational beat has come in despite higher ad spends. One was assuming that to protect their margins, improve their margins, the company would cut back on ad spends, but no, it was purely gross margin led, and company's cost cutting efforts have come through. The ad expenditure actually came in high by 20% at around that 1,023 crore mark. So this is a good sign. Across their segments, we saw growth in home care, personal care, which are their main segments. They saw a volume growth of double digit in the home care business, and the personal care saw broad-based recovery across the brands. Food and refreshments too stepped up with 10-11% growth. The management said the wholesale and the canteen store department channels are seeing some stability gradually, and they expect gradual improvement in the rural demand. And they also gave a caveat as far as input costs are concerned, said they might inflate further. Remember, the stock is at a record high. So in light with what the numbers the company posted, what the management has said, we'll have to keep an eye out on sustained growth in revenues. Also, post-GST improvement in trade channels. Can they step up their performance in the second half and actually take their volume higher than the 4% range that we've seen over the last few quarters? So we'll keep an eye out on all those things, but today expect the stock to be in the green. All the brokerages too have revised their target prices upwards.
Okay, well, definitely we're going to have HUL in focus in today's trading session, but it was a healthy quarter for Kotak Mahindra Bank as well. The company's numbers beat estimates on almost all fronts. Asset quality improved on a quarterly basis. But what are the brokerages making of this stock now? Abhishek joins in this morning to tell us more. Abhishek, morning.
Good morning, Ekta. So what brokerages are saying that loan growth momentum is back with the bank. Now 21% is the kind of loan growth, but if you look into the deeper breakup into that, corporate loan growth was at multi-quarter high. Despite that fact, profit growth momentum has come down. So what brokerages are saying that management is delivering on the growth guidance that they have given, but valuations are expensive for Kotak Mahindra Bank. So you have only two buys or outperformance rating, that is CLSA and Motilal Oswal, while for Credit Suisse, Macquarie, it's a neutral rating, Axis Cap on a hold rating, and Prabhudas Lilladher at just accumulate rating. Back to you.
All right, Abhishek, hang in there. You spoke about Kotak, but another private sector bank reports its second quarter earnings today. Yes Bank, that is. All eyes will be on the asset quality?
Exactly, Mangalam. All eyes will be on the asset quality. But if you look at the historical numbers of last few quarters, 30% is a key figure to note across whether it is loan growth, NII growth or the PAT growth. So loan growth above 30% will be very positive. Last quarter, the net interest margin was at 3.7%, which is a very peak number. So anything at and above 3.4% will be very positive. Speaking on asset quality, the divergence that they reported based on their FY16 balance sheet, Street is a bit worried after what Axis Bank has reported, and they are worried whether Yes Bank will report, divergence on their FY17 balance sheet. So let's wait into that and see how it pans out. There are also a few other accounts, that have been in talks. So whether Yes Bank has an exposure or not, we need to see. Our polls suggest an NII growth of more than 28%, but provisions are expected to remain elevated. That is why profit growth of just 26%. Back to you.
Well, we have Jubilant Foodworks, which is going to be releasing its numbers today, and the same-store sales growth is always an interesting statistic to watch. But Mangalam, what can we expect?
Absolutely.
Especially with the seasoning issue that took place.
The seasoning issue, that would be a one-off, Ekta. The bigger issue was the management change, and over the last 2 quarters, they've really revived Domino's fortunes. So the same-store sales growth, as you rightly pointed out, that will be the most important number to watch out for. We're expecting anywhere between 5 to 6%. Remember, the last quarter, they did about 6.5% as well. So sustenance of that is something we'll be watching out for. This comes about 15 minutes after the results press release. As far as numbers are concerned, total income growth of 9.2% seen. Margins are likely to expand by about 200 basis points, and that is primarily on account of lower losses in the Dunkin' Donuts business, and that is something the management has been very focused on. The net profit is likely to grow higher by about 26.5% on the back of that. But remember, the absolute numbers may be different given the GST service tax adjustment, so we'll keep an eye out on that. Brokerages through the quarter have, through their channel checks, suggested that there has been a continued growth in the same-store sales growth. So that is something we'll keep an eye out on, especially given the kind of rally that the stock has had, nearly 83% from the start of this year. But that is something we'll be watching out for. That is as far as the pizzas are concerned. But Ekta, from pizzas going on to medicines, Biocon, what are the expectations?
Well, Syngene has already reported numbers, and that is basically the research arm of Biocon, and that's in line with expectations, where Syngene's numbers have revenues grown around 10-odd%, margins at around 33-34%. So they've really reported quite steady in terms of a performance this time. So as of now, we're working for Biocon, we're working with a revenue growth of around 9-odd%, with margins which could come down, however, on a consolidated basis, simply because of the Malaysian facility being commissioned. In terms of the revenue, remember that they did have some impact in the India business on account of GST. So there is a Q-on-Q recovery which is expected this time round. Besides that, we are expecting to see the profit decline. The poll is indicating a decline of 25%, but it's important to point out that the range of the profit decline is as much as 5% only to up to even 36%. So the range for a profit figure for Biocon is quite wide. So I'd wait out to see exactly what they report. In terms of the other key points to watch out for, obviously it's going to be commentary. Commentary will probably be more important for the stock as opposed to just the key numbers, and the reason is that the biosimilar portfolio is really dependent in terms of what happens with the Bangalore facility and the US FDA remediation of that. So I'll be watching out very keenly for the commentary first as opposed to just the numbers.
All right, Ekta, we'll keep an eye out on the commentary coming in from Biocon as against just the numbers. We'll slip into a short break, come back, we'll focus on the cues to watch from the futures and options space ahead of the October series expiry. Now, today is the end of the October series. 526 points is what the Nifty has gained so far. The last one was the worst one in this year. Can this one be the best one? However, how has the series done? Nigel's here to give us all the details. Nigel, give us the lowdown.
Well, as you said it, in fact, it's been the best series that we're going to be seeing all the way since March 2016. And in fact, in this series itself, we've hit 526 points, as you said. And the last best one, that was in March 2016. At that point of time, we put in more than 770 points. Really, the big action has been just one day ahead of the expiry. So if we just take...
Last one was the worst one in this year. Can this one be the best one? However, How has the series done? Nigel's here to give us all the details. Nigel, give us the lowdown.
Well, as you said it, in fact, it's been the best series that we're going to be seeing all the way since March 2016. And in fact, in this series itself, we've hit 526 points, as you said. And the last best one, that was in March 2016. At that point of time, we put in more than 770 points. Really, the big action has been just one day ahead of the expiry. So if you just take a look at it, the PSU banking space, that is up more than 30%. And high beta really did very, very well. The infra segment did well, metals as well as the Realty Index, all of them running away. Let's pull up the biggest winners, though, on the Nifty. If we needed to move higher, we needed Reliance Industries to come in there and, in fact, play in a good innings. It did exactly that. It's up close to around 20% for this series itself. But just take a look at Bharti Airtel. Out of nowhere, that's come in and given you 35% return in a single series. Even keep in mind, something like an Ultratech Cement as well has gained close to around 15% after seeing a bit of a correction in the last couple of series. Well, if you're continuing with gainers, then Bharti Infratel, that stock did quite well. Hindalco as well in there with a gain of more than 10%. And keep in mind, ICICI Bank, well, just yesterday it gained close to around 10-11%. And that's what it's done for the series. So one day has changed everything for ICICI Bank. In terms of losers, some of those best performing stocks in the last couple of years or last few series, they in fact have got a bit of a pounding. Bajaj Finance, that was down close to around 6%. You had IndusInd Bank as well as HDFC, all of them seeing cuts of around 4 to around 6%. But let's talk about some gainers and take a look at the screen. The PSU Banking Index, that's clearly taking your breath away. Most of those gains came just yesterday, but for the series itself, PNB, who would have thought 55% returns, Bank of India giving you good returns of more than 35%. And let's pull up the next list as well. A surprise entry in there. Idea, after seeing a lot of selling in the last few series, well, it's given you a whopping 30% returns in a single series, and even Torrent Power in there with returns of around 30%. But obviously, everything's not hunky-dory, so you'll have a few losers as well in the F&O space. Reliance Communications, that's taken a knock of close to around 15%, and Strides as well did take a bit of a knock with a cut of around 5%. But to wind things down then, definitely it's been a good series. When you hit 500 points in a single series, it's been a good one. And as I said earlier, it's going to be the best one that we've seen since March 2016. Back to you all.
Yes, absolutely. Thanks, Nigel, for that. But let's stick with the F&O cues. Mangalam, over to you. Specifically, just break it down on a micro basis for us for today.
For today, you know, Ekta, 526 points is something that we've gained. Let's see what happens in today's trading session. July 2017 was where we gained 516, so we have a lead of 10 points. Let's see what happens in today's session. But the FIIs, they bought in cash markets, hedged their positions by selling some in index futures, close to around 1100 crore worth selling out there. Wouldn't look much into that given the expiry rollover factors as well. The Nifty futures discount that has come to 5.5 points after the premium that we saw yesterday. The put writing, that one really stood out. 10,300 put, that one saw 17 lakh shares being added. 10,250 put to saw a lot of writing, but we saw some bit of punt buying at the 10,350 call. Watch out for that. As far as the Nifty Bank is concerned, there was a lot of put selling at 24,700, 24,800 levels, 25,200 calls. That is something that I'll be watching out for. A lot of action taking place out there. The big figure though came in the stock futures. The FIIs, they bought about 2,000 crores, and even if you adjust for the rollovers, just take a look at what took place in individual stocks. It's a tale of two cities. The PSU banks, that plate should come up for you. A lot of short covering in Bank of Baroda, SBI as well as ICICI Bank. Look at there, the open interest change in Punjab National Bank was higher with the stock moving higher. That's fresh longs, and a lot of short covering in SBI, ICICI Bank as well as Bank of Baroda. Let's move to the other city, the NBFCs. They saw a lot of short build up after a 5 to 7% cut. L&T Housing Finance stands out with an 18% open interest increase. But let's move away from the equity markets into the commodities arena. Manisha Gupta joins us now. Manisha, morning.
Hi, morning. And it really has to be about the metal space yet again that we talk about right now, because you have seen a decline in the US dollar that has been supportive. So starting with the industrial metals first, well, remember, we have seen strong, good economic data. The equity markets have been making highs as well, and we have been tackling the supply concerns, good demand scenario. So you have the copper prices yet again at a 3-year highs, and there is the International Copper Study Group, which has said that not just this year, but we are looking at a higher deficit in the 2018 as well. That has been supportive. The zinc premium of cash over 3 months is at a 10-year highs yet again. That is indicative of short shortages in the immediate available supply for zinc, and that's supportive. Again, nickel prices is yet another thing that has been on the higher side. The demand from the electrical vehicles is expected to grow from 40,000 tons in previous year to nearly 220,000 tons by 2025, and that's not the kind of supplies that the markets are working with. So every metal with their own fundamentals has been pushing on the higher side, and the precious metal space also seems to be taking some support from that. The weakness in US dollar has taken the prices to nearly 100-day moving average right now. So you are looking at support in gold, silver, platinum, all of those metals in Asia right now.
Okay, all right, Manisha, thanks very much for that. On that note, we're going to wrap up our breakfast, but we'll leave you with the picks of our bullseye contestants for day 4 of the week. Thanks for watching.
My first call is a buy call on Genus Power. Buy Genus Power. Stop loss 59.90, target 74. My second call is a buy call on Jindal Stainless. Buy Jindal Stainless. Stop loss 109.90, target 124. My third call is a buy call on Indian Hotels. Buy Indian Hotel. Stop loss 109.50, target 121. My last call is a buy call on Dabur. Buy Dabur. Stop loss 314.50. Target 337.
My first call today is a buy call in India Cements with stop loss below 180 for target of 205. My second pick is a buy call in Adani Ports with stop loss below 405 for target of 434. My third call is a buy call in GSFC with stop loss below 143 for target of 170. And my last call is a buy call in Cummins India with stop loss below 898 for target of 952.
First is buy on Andhra Sugar with a stop loss of 550 and for the target of 645. Second is a buy on KNR Construction. Buy KNR with a stop loss of 230 and for the target of 270. Third is a buy on Prozone International with a stop loss of 59 and for the target of 75. And last is a buy on Global Spirit with a stop loss of 85 and for the target of 97.